Welcome to Breaking News to Trading Moves. Today we're looking at all the market talk building up around Tesla. They've got this announcement teased, right, for October 7th on X.
That's right. And, leading up to it, you're already seeing folks trying to figure out what it means for different companies.
Yeah, exactly. People are kind of placing bets. Essentially, they're drawing up lists of who stands to gain and who might feel some pressure, all depending on what Tesla actually unveils.
And that's really what we're focusing on today, looking at the material that maps out those potential winners and losers based on the speculation.
So the core of it seems to be this tension, right, between making something more affordable for the mass market.
Or going high-end, showing off tech.
Exactly. Performance versus accessibility. The teaser video, according to reports, seems to point in two pretty different directions. What are those main possibilities people are weighing up?
Yeah, there are basically two dominant scenarios floating around. First, there's a lot of chatter suggesting a focus on affordability, getting costs down.
Like a cheaper Model Y.
Potentially, yeah. A lower-cost Model Y, maybe even one specifically built in the U.S. That's one strong line of thinking.
Okay, and the other?
The other side is all about performance and, well, maybe a bit of hype. Talk of an epic demo for the Roadster, the high-performance one they've talked about for ages.
Right. Two very different kinds of announcements.
Wildly different implications for the auto industry, for tech, you name it.
Okay, let's follow the first path then. The affordability one. If Tesla does reveal a cheaper Model Y or something similar aimed at the mass market, how does that change the game for EVs overall? Especially now the U.S. EV credits have just changed.
Well, that lower price point is key. It's seen as a potential catalyst because it tackles that big hurdle, cost, accessibility.
Makes EVs reachable for more people.
Precisely. A more affordable Tesla could really expand the total addressable market, the TAM, for electric vehicles generally.
And the timing is important, too, with the tax credit.
It's very important. That $7,500 federal EV credit in the U.S. just expired September 30th. So if you're betting on Tesla keeping up its sales volume, a cheaper car is seen as a way to do that without relying on those government incentives.
So it helps them keep selling cars, maybe even into 2026, like some reports suggest, despite the credit ending.
That's the thinking, yes. It helps sustain U.S. unit volumes and shifts the focus, maybe, from purely luxury towards more mainstream competition.
Okay, so if that affordability play works and drives more volume, who benefits right away? Let's trace it through the supporting cast, the ecosystem.
Right. Well, if more people start buying EVs, what do they immediately need?
Charging. More places to plug in has to be.
Exactly. So demand for charging infrastructure goes up. That points towards the charging network companies, like BLNK charging, that's BLNK.
BLNK, got it.
And ChargePoint, CHPT. Their business really depends on how much those chargers get used. More EVs on the road should mean more usage, maybe better revenue outlooks for them.
Okay, that makes sense. What about the batteries themselves, the raw materials?
Good point. You got to look upstream, too. To the materials inside the batteries. Lithium is the big one, obviously, but also other specialized battery materials.
So companies that mine or process that stuff?
Companies like Albemarle, that's A-L-B, and Livent, LTHM. Their fortunes are pretty closely tied to global battery production. If EV makers ramp up their plans, it supports demand and pricing for those materials.
Right, so charging and batteries. Let's move inside the car now to the electronics. Auto semiconductors are often mentioned as winners. Why do they get such a boost from EV volume? Isn't it just more cars, more chips?
Well, yes and no. EVs already use considerably more semiconductor content, dollar-wise, than gasoline cars. So higher EV volume automatically lifts the chip makers.
Okay.
But it's also about the type of chips. It's driven by really two big things. First, all the complex computing needed for ADAS, advanced driver assistance systems. That needs serious processing power.
For the sensors and self-driving features.
Exactly. And second, you have the sophisticated power electronics. Managing the high-voltage battery, the drivetrain, making it efficient. That often involves specific materials like silicon carbide, CSE.
Okay, so it's specialized stuff.
Very specialized, which is why certain auto-focused chip companies are often highlighted, like ON Semiconductor ticker ON.
ON.
And NXP Semiconductors, NXPI. They supply these high-value components that are becoming essential in pretty much every EV. More EVs mean more demand for their specific products.
That clarifies the ecosystem and the hardware side. But what about Tesla itself and maybe companies closely linked to its sort of brand momentum? Who benefits directly from whatever Tesla announces?
Well, the most obvious one is Tesla, TSLA. Any announcement, whether it's the affordable car or the big Roadster demo, helps clarify their strategy and, keeps the buzz going. It supports investor sentiment, keeps orders flowing.
Makes sense. Anyone else directly tied to that?
There's an indirect but quite important potential winner, often mentioned, NVIDIA. NVDA.
NVIDIA. Because of AI and computing power, tell us a bit more about that link. Why does their performance often seem connected to Tesla's autonomy progress?
Right. NVIDIA is basically the backbone for a lot of heavy-duty AI computation. Tesla's approach to self-driving, using cameras only, well, that requires crunching just enormous amounts of data.
Real-world driving data that needs processing.
Petabytes of it. It needs constant training, validating, refining the software. That takes massive computing power for both training the AI models and running them what they call inference. And that's where NVIDIA's powerful GPUs come in.
Even though Tesla's developing its own chips, too.
Even so, the sheer scale of the computing effort needed for full autonomy, which Tesla's really pushing the boundaries on, creates huge demand for this kind of high-performance computing infrastructure. NVIDIA is a key provider there. So if that Roadster demo really shows a leap forward in vision-only autonomy.
It validates the need for all that computing power.
Exactly. It reinforces the idea that achieving that level of autonomy requires a massive compute budget, which plays right into NVIDIA's strengths.
Okay, we've talked through the potential upside scenarios, but launching an affordable, high-volume car, that's also an aggressive move against competitors, isn't it?
Absolutely. It's inherently competitive.
So let's flip the coin. Who do analysts think might face the most pressure from this announcement, particularly if it is the lower-cost model? Let's start with the big, established U.S. automakers.
Yeah, the materials definitely point towards companies like General Motors, GM, and Ford F.
Why them specifically?
Because a truly affordable Tesla, especially something like a crossover or SUV, hits them right where they're trying to build volume in the U.S. EV market. They're already dealing with challenges, right? The cost of setting up their own battery production, different labor structures compared to Tesla.
So price competition would be tough for them.
It likely forces them into sharper price competition, maybe more incentives, and that could really squeeze the margins on their electric models, which are probably already pretty tight.
Yeah.
It puts them in a difficult spot against a competitor like Tesla, known for its manufacturing efficiency.
And if it's tough for GM and Ford, what about the smaller U.S.-based EV startups? They don't have the scale or the deep pockets. How does this affect, say, Rivian or Lucid?
For startups like Rivian, RIVN, and Lucid, LCID, the threat could be even more immediate. They operate at a much lower scale, higher costs per vehicle.
Right.
If the market suddenly gets a very popular, cheaper option from the clear market leader, well, that could pull demand away from their higher-priced vehicles.
Especially Rivian, maybe. Since they're aiming a bit more mainstream than Lucid.
Potentially, yes. Lucid targets that ultra-luxury space, which might offer a bit of a shield. But Rivian, trying to sell its trucks and SUVs more broadly, could face serious headwinds. A cheaper Tesla forces them to think hard about their own pricing, makes them more vulnerable to financing conditions, and just generally makes attracting customers harder.
Okay, one last area of potential pressure. This one isn't about price or volume, but about technology, specifically LiDAR companies. If the announcement involves that epic demo for the Roadster, how could that negatively impact LiDAR?
Yeah, this risk hinges entirely on how impressive that Roadster demo is, assuming it happens and focuses on autonomy. Tesla's whole approach, as you know, famously avoids LiDAR. They use cameras only, vision only.
Right. They argue LiDAR isn't needed.
Exactly. So if this demo manages to showcase really impressive self-driving capabilities, maybe doing things previously thought to require LiDAR or other sensors, it sends a negative signal about LiDAR's necessity.
A negative signal to who?
The whole industry.
To the broader market, yeah. And specifically to companies banking on automakers adopting LiDAR widely. If Tesla shows you can achieve top-tier performance without LiDAR,
it makes LiDAR seem less essential, maybe too expensive or complex.
That's the potential interpretation. It could suggest that the multi-sensor approach used by many others might be overly complicated, maybe not the only path forward. This could dampen confidence in widespread LiDAR adoption for passenger cars.
And which companies are most sensitive to that kind of shift in thinking?
The ones focus heavily on getting their LiDAR into production cars. Names like Luminar Technologies, that's LAZR.
LAZR. And AEVA Technologies, AEVA. A successful non-LiDAR demo from Tesla could create friction for their narrative and their business model, it raises questions. So really, as we get closer to October 7th, it boils down to these two main things driving market expectations. First, can a lower-cost Tesla actually expand the whole EV market, especially after those subsidies ended, keep the momentum going?
Market expansion.
And second, what kind of technological statement does Tesla make? Does the demo validate their vision-only approach, or does it fall short? That sends signals about specific technologies like LiDAR.
Yeah, and perhaps the main point for you, the listener, is seeing how just the expectation of one company's announcement can cause people to game out scenarios across so many different areas. We're talking charging networks, battery materials, chip makers, and of course Tesla's direct rivals, both old and new, all before anything's actually been announced. And just a reminder, it is essential to remember that this discussion is not financial advice, nor is it a recommendation to buy or sell any security. This content is purely a reflection of the opinions and analysis found within the materials reviewed.